Howdy, Pat. Glad to see you made it.
Yeah, Rick. Yep, we had a little technical snafu up until about 15 minutes ago, so we got it.
I had you on standby.
The standby looks better.
It's just there's nothing like cardboard Pat to pull out of Friday. So I was sitting here waiting for you to log on, thinking, oh, I don't know, it might not.
The only thing that's bugging me, though, is my camera's down there, and I'm looking at you up there, so it looks like I'm not looking at the audience in the eye. So it's just it's like, oh well.
Yeah, well, it sounds like you had to slap something together pretty quick just to get things rolling.
Yeah.
So I'm happy to be back at home in the studio here. My trip actually encompassed 3,000 miles.
Wow.
So that's a lot. And it was fun, don't get me wrong, but there's a few times where I was out in the middle of nowhere, just looking at the road, looking at my gauges, looking at the road, looking at my gauges. Please don't break down out here.
I can imagine.
Oh man, you ever driven through Nevada going from Las Vegas up to Idaho?
No.
It's about as bleak can get. It was pretty rough.
I drove through some parts of Kansas. I bet you Kansas would rival that too.
Oh, no kidding.
So,
well, look, here's what we got today, Pat. We have 7,704. I keep waiting for a Saturday to hit 8,000, and not that that's a game changer, but this might be the Saturday. We had 4,120 homes come up for sale, 3,696 go under contract, and that's a difference of 424 right here. You can see that. It's kind of a typical breakdown at the end of the week. So, it shows, the red line shows where our sales are. So, when I hear that sales are sluggish, and we're going to talk a little bit about that today. I don't see it on the chart. I see a big difference in April and May here because that's when things were bonkers. And we're going to dive into a little bit of price categories here too and see what's going on compared to last year and the year before. And there's a few eye openers in there. But the eye opener for me today, Pat, is we have 1,941 price reductions. Now, there's a difference between a price reduction and the actual price of homes going down. Price reductions are me thinking that I can get $600,000 for a $500,000 house. I list it. I'm wrong, so I have to reduce the price. That number keeps creeping up. But there are some surprises. I know of a house in Ahwatukee last week. List price is $800. Got an offer for $903. So that's still going on out there. What about rates? We were kind of sitting waiting for Fed Chairman Powell to say something.
Yeah.
And lo and behold, he said instead of beginning to taper next year, he said possibly November.
Yep. They right here.
Yeah.
They got let's see here if I can. This is rates. This is basically right here. This is from fourth quarter 2020. We saw a run up. We saw it back off. And then we saw this. Remember I said rates were kind of mulling around here?
Yeah.
The last 30, 40 days. This is from like August or September. And I was telling you on the ride, obviously we talked a little earlier, but it's pretty amazing. That's kind of what I watch for is, you see this channel. Rates had a crappy day yesterday. The 10-year bond was down 70 basis points, which basically equates to anywhere from an eighth to about a quarter point in rate movement. So anytime we have a rate movement in a given day, that's a huge day in the mortgage market. A lot of times, like I said a couple months ago, I was explaining that on any given day, I could quote 3%, no closing costs. The next day rates move up a little bit. It's 3%, but $800 in closing costs. Day to day, the cost will fluctuate, but you can still get 3%, but your costs are going to fluctuate. But if we have a big day where not only your costs fluctuate, but your rate goes from 3 to say 3.25, that is what we had right here, that red mark right there, where rates, it was up. Like I said, the 10-year bond was down 70 basis points in price, and that's bump up rates.
Well, it was interesting because I was reading, some of the commentary, and they were saying that prior to Chairman Powell talking that they had already kind of baked the rates in, in the bond market and treasury market ahead of him talking. And then lo and behold, he talks and surprises everybody about the November statement. And then yesterday, bam, just.
Yeah. So I think, you kind of, the market looks ahead. Maybe this is the taper tantrum that we saw, because today the bond market, came back. It was up plus 14, which is a decent bounce back. But like you said, this is what I was kind of, when I watch rates, it's just, we saw this. I mean, this is the back down here was when we saw the floor and rates back over here and going back a little further. And that's why, people think, oh, rates are going to go down lower. I mean, there's just been somewhat of a floor, and it was building here. And I told you, I mean, it just, when you watch rates, you just feel like if you watch them for 30 or 40 days and they're not doing anything, you just know that there's a combustible fuel just building that they're going to. And typically when rates move, they don't move down hard, they move up fast. And that's the problem. People, have a tendency to chase rates now, say, because if it breaks this channel, it might stay in this channel. We're going to see probably maybe a little back and filling here. But this is where the consolidation was a little bit in the last 30, 40 days. They were just kind of quiet. And you just knew that something was building, which is, it's just, so if they do, maybe now with this temper, the news that they are going to, they are going to pull back. They're still going to be buying. I saw the number, can't remember. It's like they're going to reduce it they're not going to pull back entirely, because they've got mortgage-backed security plan purchase agreement, through 2024 and 2025. They're just going to go from, like, say 70, 80 billion to maybe 50 billion. And the problem is they're reinvesting billions of dollars per month on the repayment. When loans are paid off, they have to reinvest that money. So they're still buying mortgage-backed securities, but they are going to pull back supply. But
so do you think that this may be a signal of a very slow long-term trend?
Yeah, I think so. I mean, they kind of got the news out there. That's now they know, okay, what's going to happen. They are probably they're going to tape it down. They're going to tap down their purchases, but they're going to have to get off this purchase market. And obviously, like you said, rates being in the high twos, low threes, we've gotten spoiled to it. You certainly could see rates, going to low to mid threes. And so people, now we would probably see some problems in the real estate market personally if we saw rates go into the high fours, low fives, mid fives, because that's got logically speaking, if somebody's having a hard time getting approved, or their debt to income ratio is high at, say, 3%, it's not going to help them at 4 or 4.5 or 5.
It's funny how when you talk to people that you just bump into and you say something about real estate, and everybody starts with, well, I've been told and I heard, and being up in my hometown and hanging with some friends, and then even just talking with a lady down here by my place day before yesterday, same thing. Well, I've been told prices are coming down next year.
Yeah.
And it's like, why? And well, because rates are going to go up. Well, yeah, rates may go up, but we still have a shortage of inventory. So will that vastly increase inventory? And how will that affect the current value of homes? And I see a disconnect there, but I think, we hear bits and pieces of what we think's going on in the real estate market. And we go, well, I heard, or I've been told. And I think not the mentality, but the, what's the word I'm looking for? The perception of where real estate's going never seems to match reality.
No.
We're going to have a crash. Well, what numbers are you seeing? Oh, you just don't get it. It's going to crash. Well, why? Well, prices are going to go up forever. Are they? And so I saw some numbers last week that in Los Angeles, the average home price is 11 times your annual income.
Now, how long has it been that way too, though?
Long time. You know what China's is? 46 times.
Yeah.
So that is And that's one of the things that was going on as far as bad news this week is this company called Evergrande, which is the world's largest holders of real estate in the world. And they're the ones in China that have built all these buildings that nobody even lives in. But then they also have sold all these buildings that haven't been finished, all these homes. And, we're upset here because it takes 10 to 14 months to finish a home. Some of the homes that Evergrande is selling won't be done until between the years 2025 and 2030. And people have put large amounts down and they're waiting for several years to get their house. Now, Evergrande has a cash flow problem and they can't make their interest payment. So everybody is waiting for China to bail them out. Well, China told them that they're going to have to split their company up and they're going to have to finish these houses and they're going to have to get help and they're going to have to seek financing to help them out. And then here's what they told businesses and people in China. This is the Chinese government. Review Evergrande's possible storm, they said. Review ways to take over real estate projects with developers. Offset impact on home buyers and jobs. Set up teams to prevent unrest. They're telling local governments, you're going to have problems in the street. Only step in at the last minute. So there's China's help. This company is about to go belly up, and the housing industry over there is going to be in deep, deep trouble. And they're just saying, set up teams to prevent unrest. Get ready for a possible storm. Pretty wild, isn't it?
That is wild.
I mean, it's just so that was bubbling around in our market. Now, whether or not that is a contagion that's going to hurt our market, hard to tell. I mean, they have been buying a lot of land, a lot of businesses, but they're not buying the house next door. So is that going to affect our local bond market? It's just one of those things that are out there that are worth watching.
Yeah, I mean, you look at the bond. Yeah, certainly the bond market is probably going to hurt. You have to. I think you have to also split it up into two segments too. The people that own a home and the people that want to own a home. The people that want to own a home, the bond market's going to affect them, right? But there's a piece on Mortgage News Daily that I pulled up. I'm just looking at right now. If I can, they're talking about. Here's some interesting stats. There's 83 million total homes owned. 37% of those are owned free and clear. Almost 40% are owned free and clear. 63% have a mortgage. And only 1.4% of the total homes out there have negative equity. It's only 1.3 million homes.
I saw a sensationalist YouTube title today. It said, forbearance is over. It's time to pay up. That's what's called exiting forbearance. I mean, it's real estate's going down. The crash is coming. But he's one of these guys who's points his finger and the title says, forbearance is over. It's time to pay up. Well,
yeah.
Okay. Well, we're just going to refi.
I got a guy right now. I'm working on a refi. He went into forbearance, didn't pay for last year. He's accumulated about $17,000 of forbearance payments that he's going into an agreement. He's going to put it on the end of the loan. He's going to refinance and just put that on the end of the loan, and he's going to get cash out because he's made 3 payments in a row. So he's going to just put that balance on the end of the loan. He's got $17,000 cash in the bank, and he's going to refinance and get more cash out, believe it or not.
Yeah, that doesn't sound like a foreclosure to me.
No, he owes about $150,000 on the house, and the house is worth $465,000.
That's a pretty common story. So I wanted to dive into by price point what we see going out there. These are listings under contract compared weekly. Mm-hmm. This is total. It says 11,218 under contract for the week ending week 38. Now, here's 2019, and we're still below 2020. So we're not selling in total as many homes in 2021 as we were in 2020. But it gets interesting. Watch this. I'm going to pull up a price range here, 400 to 500,000. And you're going to see we are way, way above 2020 numbers. 2020, we were at 1523. Now we're at 2382. The interesting thing is last month, and this month's probably going to be higher, the iBuyers, which are OfferPad, Open Door, and Zillow, and Redfin. Redfin maybe buys 3 or 4 homes, but collectively they purchased 1,142 homes last month. So here you're sitting there at 2,382 for a week. Well, 300 of that is probably going to be 350 are the iBuyers. So that number comes down to about here with you and I out there purchasing homes. And KCH says, seems like the government did a great job of hurting future generations to ensure many will never be able to afford a home. What are your thoughts? Well, it's more, my thoughts are central banks dive in to save us from economic collapse sometimes. And sometimes the pain that comes with that are unforeseen events. So in other words, what would we be looking at right now if in 2008 that the Fed didn't do anything? And we'd be looking at through this pandemic if the Fed didn't do anything. You'd be looking at insane unemployment, despair, and it would have been pretty doggone bleak. Instead, we were looking at, because the money's so easy to get, it only had 2 destinations, and that is the stock market and the real estate market. And unfortunately, whether we like it or not, that's what happened. I don't think anybody set out to do it that way, but it's kind of where we're at.
I think the government obviously helped with the forbearance. I mean, as much as I'm not for government control, help. I mean, I think they did help tremendously. They saw 08, 09 what happened, and the forbearance, they were on top of it. They basically, the controls that they had with the forbearances, because obviously a lot of people went into forbearance. It was kind of like a stopgap, like, hey, just in case, here's what we got. Because in 08, 09, they were running behind. They were running with the cart before the horse. They didn't know what was going on. And they implemented all this stuff in 08, 09. They implemented after the crash. But they were a little bit ahead of the game, which I think helped. I think the government could do a better job of, really looking at first-time home buyer. They could dig a little bit further into first-time home buyer programs even further, and try to tweak them a little bit to help the first-time home buyer. Honestly, I think the real estate, I'm kind of just thinking off the top of my head as I'm talking, but I think the real estate market itself, the industry itself could do help a lot. And in general, we all could, by, how am I saying this, is, a lot of people, when they list their market or list their house, they're selling to iBuyers, they're selling to institutions. Give the first-time home buyer, I know it's greed. I mean, there's a lot of stuff with greed, but when you're selling a house, give that first-time home buyer a shot at buying a home.
Yeah, they're not even listing the home.
So I think they're doing. I mean, the market, the people that are involved in the market is, because I have seen transactions that I have seen sellers say, you know what, in the last year, I've seen sellers say, I'm not selling to an institution. I want to accept the contract of the first-time home buyer to give them a shot to own a home.
Yeah, so I think that to jump in, the biggest red flag that I see too, Pat, is that, I honestly don't believe that this is going to hurt future generations for a long-term time, because I've seen markets go up, go down, go up, go down. You can't afford it, then you can. And, in my lifetime. Now, will that pattern continue? I don't know. But I don't see us being hurt in future generations in real estate in the long term. However, I do see a problem with debt that particularly, and I'm going to get a little political here, this 3.5 trillion added onto the 1.5 is the most foolish move I've ever seen. We're about to see the highest tax increase in 50 years. That ought to bother you way more than any federal intervention, central bank's intervention into real estate, because that is going to crush you. And that's going to crush future generations for a long time. And that'll have a huge economic impact on everything we touch.
Yeah. And I think real quickly, I think what I've seen a trend the last couple of years is the first-time home buyer, the people that have been, I'm going to jump around here a little bit, but the people I've seen, the first-time home buyers that I've seen being able to buy a home, they really took it upon themselves responsibility to make sure that they had no debt, that they ain't go and spend. They don't have two car payments, one of 450 and one of 550. They were very diligent on keeping their debt load low and trying to accumulate. Say, if somebody can accumulate 5% for a down payment, if they if they get a husband that's working, a wife that's working, they got no debt, and if they can accumulate 5%, on a $400,000 home, that's $20,000. And if they could just chip away and just get tightened up, like you said, the people I've seen buy homes have been very responsible in managing their debt and having the 5 or 6 or 10%, maybe 5% to put down. Maybe they get a gift from a relative. They're lucky enough to do that. But I just noticed there's a characteristic of the first-time home buyers are very diligent on buying on their credit and their debt load. And people can buy a home. I mean, like I said, with 5% down. I'm just kind of, getting on my soapbox here, but I go through people's bank statements to look at deposits and stuff like that, seeing what's going on. If people would really sit down, if they're serious about buying a home, they can typically, I've seen people in their checking accounts, they can curtail $500 to $600, $700, $800 a month by just watching their spending. And all of a sudden, over a year time, you've got $10,000, $15,000 to, it doesn't take that long, believe it or not. And 5%.
You ever seen the kind of cars that are parked in apartment complexes?
Yeah. Yeah. And that's, if you got an $800, $750 car payment and you got some student loan, I've had people that make $4,000 a month, buy one home, they buy another one, they rent it out. I've got a gentleman that makes, he made 50, his wife worked a little bit, but he worked at Coca-Cola, made $50,000 to $55,000 years ago. He bought one home. Now he owns one home plus 3 rentals. It's not like he's making $150,000 a year, but he's very diligent on watching. And that's, I'm going to get a little preachy here, but, people cry about not being able to buy a home. It's the first time I've gotten probably preachy a little bit, but scolded people, but, take a look at yourself first before you start, see what you can do, because you can do a lot if you really hunker down, get your debt load. Don't go out and buy that $50,000 car where you got a $750 car payment. Like I said, I've seen the instances where people have been able to do it, making $4,000, $4,500 a month, $5,000, $60,000 a year.
Yeah. I've seen some real surprises out there. I think,
I don't know if I made sense on
I
that.
sympathize with, my nephew, he can't, well, I don't know why my echo here decided to start talking to me, but, he can't afford to buy a home. He hasn't got the down payment money. He doesn't have a large house payment. He's living with 2 other people and 2 of his kids. And when I saw him, he said, I'll never be able to buy a home. And I said, well, the word never is not true. You'll be able to. You're just seeing a delay right now. And this is a big generational shift, because there's a lot of you that are wanting to buy a house at the same time in your age group. And there's a lot of people in my age group, we're just not selling. Yeah. And so that's the real problem. There's a group of baby boomers, and then there was a lull. So builders didn't build. And then there's a huge pile of millennials that want to buy, and builders didn't catch up. Now, it looks like they're going to really start getting caught up in 2022, at the end of 2022. And so, it's
been tough, because it's been tough with COVID. I mean, you got the supply chain, people to build. I mean, it's just, maybe we're in this period where people are just, maybe the next year and a half, 2 years, it's going to be a period where it's like, it's going to be tough for the supply, the builders are behind. You got the millennials looking to buy. You've got the older generation, the seniors, I'm 57. I guess I get considered old, but I'm not.
You're almost there.
Yeah. But I mean, there's a age, in the last year, there's been also that 70 to 85-year-old group that has not, like, remember we talked a couple months ago, they're not going into seniors, care facilities because of COVID. Their kids are keeping them at home, so they're not selling their house.
Yeah.
So there's so many factors that are keeping this market just jacked up. It's going to change.
Let me stop you there for a quick second so we can answer this question. Raj says, what are the fees associated with buying a home?
Well, first of all, it's my 10 points I charge for a loan right away.
Yeah. Well, yeah, because you just bought that new car.
Yeah,
So
yeah, yeah. No, I'm just being a little fun. The fees that are associated with it, uh, I'll tell. There's a lender fees, title fees. Those are the main things that make up a loan. Me being a broker, I don't have any underwriting or processing fee. The average lenders will have a processing or underwriting fee of $12,000 to $1,500, or an origination. I don't have an origination or any other. I don't have any fees basically up front. I get paid by the lender because I'm a broker. I got 30 different lenders. What you have is title fees. The title fees are endorsements, the title policy. Those are typically in an average size home of say 400,000. They might be about 1,800, 1,500 to 2,000. You get the appraisal that runs 500 to 1,000. And you got endorsed, see, all the title fees are usually about 1,500 or 2,000, and the appraisal fee. And then the stuff that's not a fee, but that's still associated with the loan are taxes, prorated taxes, might be $300, $400, $500, $600 or whatever. Then you got the HOA. You might have an HOA that might be 500 to 1,000, depending on what you got to pay, the transfer fees, and that's and really taxes. Let's see, taxes and insurance. 1 year's insurance. You got to pay 1 year insurance up front. So
yeah, and then your down payment, which can start as low as
your down payment.
Yeah.
So down payment's separate. So on a $400,000 house, 5% is 20 grand. On a $400,000 house, I would say the average fees. Now, when I say fees, I mean I'm talking the lender fees and all the taxes, insurance, then HOA. On 400,000, you might be looking at about $5,500 to $6,000. Let's say 5,000 to 6,000. Point and a quarter. So.
Well, KCH says, I keep getting outbid by 50 to 100,000. It sucks, but hopefully the future will be better. It seems to me, if I recall, you're kind of in the $600,000 to $800,000 range, and that price range is getting pounded pretty hard. So, unfortunately, as we look ahead right now, October, we'll see more listings come up because we just do every October. But I don't think the amount's going to be very eye-catching. Yeah. And then November, December slow down. There's no avoiding it. It's just going to be less inventory and less buyer traffic as we get into the holiday season. So now January, I don't know. That's the month to watch. I just really don't know. And then we have G Dirt here. Should we even attempt to buy a $400,000 house in Phoenix at this time? I get supply is an issue, but is there not a worry that within the next 5 years we could see the value drop in half? Something has to really, really go wrong for value to drop in half. And that has only happened once in my lifetime. And I'm not saying it won't happen again, but we're 5 million homes short of what we need nationally. And that, is that going to suddenly turn around to where we're going to have a 5 million home excess? That's what it's going to take. Normally, we have 20,000 homes for sale on a weekly basis. We have 7,600 today. Yeah. So we're going to have to go, before it crashed in 2008, in 2006, we had well over a year's worth of inventory. Today we have a week and a half.
Yep.
So, so I can't predict out 5 years. I think what I'd look at is say, well, how long do you plan on staying in the house? And if you like it and you like your payment, then who cares? Yeah. It's a fixed rate. And if inflation is coming, and it's here to stay, then that fixed rate is even more important than ever. Yep. Would you agree, Pat?
Totally agree. I mean, that's the thing about buying a home. Unlike a lot of people are in the rental on the apartment, renting an apartment or renting, they're getting really sideswiped by getting price increases of I'm not just talking at $50 or $75. I'm talking $200, $300, $400 yearly per month yearly increases. So their rents are going from $1,300 a month to $1,600 a month, $1,700 a month. And just to answer one KCH and Dirt, G Dirt, I mean, I really feel the last year, the people that on my end, and I say, I'm just giving this some general advice, it's just become harder to buy a home. You got to be persistent. The low-hanging fruit's gone, but if you keep looking and keep if you're determined to own a home, I'm absolutely convinced that you'll find a home in that price range or around that price range. You got to be open-minded, but there will be an opportunity that, you just, people get frustrated after a couple. What I've seen is people, the husband and wife go out, the husband gets frustrated or the wife gets frustrated, after 2 or 3 months, like, we're done, we're done. But make it kind of almost a job. If you really want to own a home the next several years, you're just going to have to be persistent and just make it a full-time job to keep looking.
Yeah, the challenge is too is trying to time the purchase of that home for when your lease expires too, and that's what's really, people give up and go, well, I'm gonna sign another 9-month lease, and then now you're paying more, and so it's really a headache. The only encouraging thing that I see that gives me a little bit of hope is that we were sitting at 60% of homes were going for over list price, and the chart's going down. Now we're at 51. Well, whoopee, that's still half the homes going for over list price, and they used to go over list price at 20,000. Now we're back down to 11,000. So that tells you that something is happening. KCH says, do you think there'll be less bidding wars in the 900 range? Boy, I can show you that right now and say I haven't seen that. And that all depends on the stock market. So here's 900. There's 36 homes, and the average is 32,000. 72 homes sold over 1 million, and the average is 44K. And that's an average. That could mean that one of those went for 100,000, another one went for 15. So as long as the stock market's good, that price range gets hammered.
Yep. But you'll find, like I said, my story, my whole theme, like I said, sorry, I'm jumping around, but if you're persistent, you might find that scenario where there's that golden nugget where somebody's got to sell, and they're selling a house. They had it listed for 430 or 450, and they got to sell, and they got to be out in the next month and a half, and they're not getting any bids, and they're getting antsy. Now they drop it from say 450 down to 430 or 425. People have to realize we're not in this type of market. You maybe won't be able to find the perfect scenario.
My perfect storm, and I said it on a video the other day, is find a house you want before Thanksgiving, look the week of Thanksgiving, and write an offer the Wednesday before Thanksgiving, because you're going to be the only one. Right? Everybody else is going to the store and buying dressing mix. And the Friday after Thanksgiving, it gets really busy because everybody's got their family in town. They're all looking for a home, but nobody is writing offers the Wednesday before Thanksgiving.
Yeah, exactly.
And if somebody's selling over a holiday period, they want to sell the house.
Yep.
You write them a good offer that they can talk about over Thanksgiving dinner. There you go.
People do not want to be moving during Christmas for the most part.
No. So do a quick close or push the closing out to January, but write when nobody else is writing. And so and G Dirt here says, I go back and forth between a single family home and a condo, as a condo seems like a less of a risk, easier to get into. My goal is to live here for 2 years, then rent it out, maybe move back to Portland. So you have a short-term outlook that you have to look at. Condos can be risky. I tried that in Everett, Washington. I said, well, I'm just going to buy this condo for 2 years and sell it and buy a house. And the market tanked. Now, when I say tanked, it only went down 10%. But I ended up putting $3,400 down for that condo. I paid $33,400, sold it 10 years later and got a check for $3,400. So we went down and then we went flat. So trying to buy and break even in 2 years carries a good amount of risk.
And condos, once again, you and I have talked about this before. Condos, they come along, they've got their own basically set of guidelines, whether it's a warrantable or non-warrantable condo. Warrantable means it's covered by conventional loan guidelines that can be financed by that. Non-warrantable means, they might have a HOA. There's just so many other factors. It's just not one unit. It's one unit. Like a single family house is just one separate entity. Condos, you got 100 different units, and you don't know if they have a lawsuit, what the investor concentration is.
Well, you may not be able to rent that condo. You'll buy it this year, and in 18 months from now, they change the HOA bylaws, and you can't rent it. Single family house, you can. So I just drove through Portland. Boy, there's a lot of tents underneath the freeway overpasses up there, Dirt.
Wow.
That
That's
was
tough.
unbelievable. I like Medford. I stopped in Medford on the way back. What a beautiful town. I didn't stop there in the wintertime, but I slipped
Yeah.
off topic there for a second. But
Yeah.
um,
So
definitely was bouncing around that neck of the woods. So I think, yeah, condos are a risk. I guess I could just bumper sticker it with that, and
yeah,
especially in a 2 year period.
you gotta do, you just condos, you have to, if you do find one, I kind of like these, my preferences, if you're stuck between a single family home or condo, I, I love these these townhome units. Sometimes you can find these little townhome units where you've got 20 townhomes together. It's kind of got the look and feel of a condo, but it's not, it's a townhome. Townhomes can be financed on a conventional loan program.
Yeah.
So, and they're usually, single story. And you just, I think it's kind of like a go between a single family home and condo. I've always been a big fan of townhomes, nice little units.
Yeah. So I think, just to kind of recap here for just a second, for this week, we saw a lot of volatility in interest rates. I think that's going to continue for the next month. I think you feel like it's probably going to march up slowly. So we're going to see what happens. Inventory, let's see if we get up to 8,000 this week.
Yeah.
We're going to start seeing inventory start climbing up week after week now by about 300 or 400 units consistently, and then start to slow back down the sales activity. The last one here, is there any data for first-time home buyer versus second-time home buyers? I mean, how many home purchasing by first-time home buyer each month, vice versa? Raj, I don't have that data. I wish I did. I can only see the homes for sale. I can't see who's buying them. So probably county records could, but I don't have access. So I want to wish everybody a great weekend. Pat, you're looking good. Glad you got the computer going, and good to be home. We need to go out and have a cold one, huh?
Yep, exactly, buddy. All righty.
All right. Talk to you soon. See
Take
ya.
care, buddy. Ciao.